Market strategist and Fed critic Peter Schiff and Nataline Securities Global Fixed Income Head Andy Brenner. Andy, the bond market is gyrating in a pretty dramatic way. What is the message here?
This is the first hawkish cut that we've seen in a long time, and it came out both from the Fed governors and in the press conference. So you reversed a lot of what we've seen. This is the first time in a long time we've actually seen 2 years yield more than Fed funds. We have not seen that in a long time.
Okay, give in English to people who don't understand that. What does that mean?
The 2-year now is back to 435. Mm-hmm. The Fed funds are now down to 432. So this is the first time. It may not sound like much, but this is the beginning of the normalization of the yield curve, when the Fed funds is now going to be the lowest yielding thing out there, which is going to change the bill market as well as the curve. And we're seeing a flattening going on right now.
Peter, the markets are having a tantrum, but you can't call it anything else. And I don't know why, because the Federal Reserve, the chair, just said the economy is remarkable, it's incredibly strong. They just don't want to risk reigniting inflation, so maybe they'll only see 2 rate cuts. What do you read into this drop of 644 points for the Dow and the rest of the indices that are falling?
Well, this may be just the beginning here. We may be getting a bear market for Christmas, and that might be the environment that Trump inherits when he, becomes president in January. Investors were very complacent about the risks of rates not being cut as much as they thought. Powell finally today was reluctant to admit that inflation is not only headed up, it's higher than the Fed expected. And Powell thinks it could take another 2 years to get inflation back down to 2%. Now, he's wrong. Inflation won't be anywhere near 2% in 2 years. It's going to be higher than it is right now. Powell is still wrong about inflation and the economy. He's very optimistic on the economy. The reason that Donald Trump was elected was because the economy is actually very weak, and the data points that out. Powell is overlooking all the revisions we've had, the massive downward revisions to prior payroll reports. So I think it's stagflation that we have, and I think that's going to get worse. But investors were very optimistic coming into today. This is a reality check, and unfortunately, reality is a lot worse than investors perceive. This is going to be, I think, the 10th straight down day for the Dow. That's the biggest losing streak since 1978. If it goes down 2 more days, it'll be the biggest losing streak in the history of the Dow.
Okay, and maybe it really all centers on the Fed funds projections for what we expect to be that Fed funds rate, Andy. In September, just 2 months ago, it was 3 months, 2.5%. It was 2.5 months. It was 3.4% for 2025. That's the Fed's benchmark interest rate. Today, that's been moved up for 2025 to 3.9%. That is probably why you start seeing these big moves in the bond market and the big drops in the stock market, correct?
Absolutely, Liz. But let's be realistic. The worst predictors of where Fed funds are going to go is the Fed itself. Their track record is abysmal. So what I think is, if Powell said today that he only thinks that the unemployment rate will go from 4.2 to 4.3. Well, it's 4.246 right now. You think that all through next year it's only going to go up 0.5%? Citi has it going to over 5% in the first quarter. He's going to be wrong. The Fed's going to be wrong, and they're going to have egg on their face for this hawkish ease that they did today.
Hawkish ease, meaning we'll ease today, but don't get excited. That's not going to happen. Peter, but I do have to ask you this, because you're talking about a potential bear market for Christmas. We've seen a speculative frenzy.
Well, I don't know that it'll be a bear market.
That's what you said. I'm just quoting what you said a few seconds ago. But be that as it may, we've seen a speculative frenzy.
It's a bear market in that if the market ultimately declines by 20% from here, then we're in a bear market. We just won't know it until after Christmas, but we would be in the bear market for Christmas. I think Powell is speaking out of both sides of his mouth as well, because given what he acknowledged about inflation, it made no sense to cut rates today. It made no sense to indicate that more rate cuts are coming. I mean, if anything, what Powell should be fessing up to is the fact that they started cutting too soon. In fact, they aborted their hiking too soon. Rates never really got into restrictive territory, and they're still not restrictive. We have record amounts of debt. And that's because the Fed has kept interest rates too low. So they started the inflation fire, and now they've been pouring gasoline on it.
Okay. Again, though, you look at the year-to-dates of these markets, and the Fed's been paused. And before that, they hiked rates pretty dramatically to try and bring inflation down. And Andy basically said very clearly, we have avoided a recession. Do you believe that, Andy? Will he be right or wrong on that?
He will be right on that, but I think the labor economy is much weaker than he anticipates. I think that's his biggest concern, and I think you'll see the Fed ease much more aggressively than the markets are building in. Right now, for January, you're 20-1 against another cut. And I think that will come back depending on the next employment number. But as Peter pointed out, you've had a lot of revisions on employment numbers, 818,000. I think the economy is much weaker than people anticipate. I believe Powell knows that, but the rest of the Fed governors do not.
Okay, I'm looking at Fed funds futures for January, and
I don't
90%.
think we've avoided a recession.
Hold on,
we may already be in one. We may have been in one for a while.
Wait 1 second. 90% odds of a pause in January. Go ahead.
Yeah, well, that's very likely. But, I think the economy, as I said, may already be in recession. It may have been in there for a while. Inflation can disguise a recession because by making all the prices go up, it looks like the economy is getting stronger, but it's not. It's just inflation that's getting stronger. And that's why the voters, if you look at the exit polls, the number one issue was how weak the economy was. If the economy was as magnificent as Powell thinks, Trump wouldn't have won. And so I think a lot of that reality is going to raise its head in 2025. And so I think even if the Fed does pause, they will eventually resume the cuts, but not because inflation's come down, but because the economy's come down. I think you're going to see a much bigger backup in unemployment, weakness in the economy, and the Fed is going to ignore the strength of inflation and cut anyway. And in fact, I still think they're going back to quantitative easing. And so that's why I think ultimately what's happening now in the dollar and in the gold is a head fake. And I think the real trade is selling dollars and buying gold because we're going to get cuts, but we're going to have it in a stagflationary environment.
Okay, both of you, thank you very much. Andy Brenner, Peter Schiff.